Welcome back, folks. We had the Dow finished up 236. NASDAQ was up 62. S&Ps are up 25. And we're going to go over to our man, Mr. Chris Gaffney. Chris, folks, of course, many of you have heard him before at TFNN. He's the president of EverBank World Markets. As you come over to our website at TFNN, you can see the EverBank banner on the right-hand side. You can hit that banner, or you can just go to everbank.com/TFNN. And when you do that, folks, what you're going to want to hit is hit investing. And as you hit investing, what I'd like you to hit is MarketSafe CDs. And EverBank, folks, is on the cutting edge of basically rewarding investors, rewarding folks that want to get safe investments. And safe is, you know, a word that I don't use a lot in the marketplace. But the bottom line is that they've put together a CD. And the way this CD works, okay, I'm going to let Chris explain it, but it's a very unique way that this works. And in this particular case, it's only $1,500 to open. You get 100% protection of your principal. There's no account fee, monthly account fee. It is FDIC insured, and it's IRA eligible. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. I always love being on your show.
I'll tell you, you know what's so cool, man? You know, and I remember, you know, the first time that EverBank itself, you know, came out with a unique product. I was looking at it, I says, man, this is really unique what a bank is actually doing. I'm going back years ago now, okay? You know, but you seem to come up with some products that are just really great in the aspect that as an investor, you're always thinking, I don't want to lose money. Right? I never really think about how much I'm going to make because I've been doing this too long. So I always think, okay, what can I lose? You know what I mean?
Well, and that's the key to, you know, keeping your investment portfolio, you know, earning is not to lose money. That's absolutely the key. And it's tough in some of these volatile markets to be able to participate in those markets and keep your head above water still, because as you know, the swings can be pretty dramatic and can come at times that are inopportune for the investor. So, and I wanted to use this time to, we do have a MarketSafe. If they go out to the MarketSafe page right now, you'll see an existing MarketSafe that we have in place, but the funding deadline for that existing MarketSafe is tomorrow, and then tomorrow, and your listeners are going to be the first to hear about it. Tomorrow we're announcing a new and what I think is a very exciting product, and it's a MarketSafe that's going to be based on metals. And I know that you're a big fan of diversification into metals and the metals markets, and we've finally been able to come out with a MarketSafe that we're calling the Power Metals MarketSafe CD.
That is absolutely fabulous. So what happens with these MarketSafe CDs, folks, okay, is that if we'll just stick with the one so you have until tomorrow to fund this, folks. And the phone number would be 855-750-4051. This one is based on the growing economies of China, Brazil, India, Indonesia, Mexico, and Turkey. It's one index, okay? They merge it as one CD index. Now, what's really cool, can you just explain to them that, you know, if in fact the index beats the dollar, that they get a 10% upside?
Right. That's the Future Economies CD that's out there right now that the funding deadline is tomorrow, is based on those 6 different currencies, and we have what we call a jump note on that MarketSafe, meaning that if those currencies perform positive, and again, if those currencies return is at all positive,
yes,
we're going to pay 10%. So even if they just go up on average 1% over the 5-year term, the investor, the depositor, is going to receive a 10% return, so their principal plus 10%. So that's our jump note structure. Now, if the currencies perform better than 10%, they're going to get that too. So you're not capped out at 10%. It'll jump all the way up above. If the currencies perform 20%, you're going to get the 20% return plus your principal. So it's a what we call a jump note. again, if the currencies go negative, if the dollar stays strong and for some reason these currencies do not, on average, perform in a positive fashion against the dollar, then the depositor will get their original deposit back. So
how cool is that?
It is a risk-free investment, a risk-free way to get exposure into the emerging markets.
Now, first off, I want to thank you from all the listeners, all the tigers and tigresses, for, turning us on to the new one that's coming out, because there's no doubt between the gold market, the silver market, the commodity market in general, we have a lot of listeners out there that are in that market. So can you just give us a few other...
I'll give you a sneak peek of
awesome,
that. It's
awesome.
Going to be,
great.
It's going to be a 5-year term again.
Yes.
It's going to be based off gold, silver, and copper.
Okay.
It's going to have an annual look back. So it's going to have annual pricing,
yes.
annual averaging. So each year at the pricing date, we're going to look at the performance of each of those metals. Now, on an annual basis, that performance is going to be capped out at 45%.
Okay.
So each year, if the metal goes up less than 45%, that's the percentage that we're going to use to calculate the overall return. If it's greater than 45%, if gold should go up 50% next year, we're going to cap that out at 45%. But ultimately, at the end of the 5-year term, we're going to average all those annual pricings out, and that's what we're going to pay to the client. So again, it's a market-safe CD, meaning there's no risk to the principal. If metals should for some reason drop during this 5-year period, the clients will receive their original deposited principal back.
Now, what's so cool here? I mean, metals, of course, we had extraordinary run 2002 going all the way up, hitting this high out here in 2011. Mm-hmm. So it's pretty neat that you're doing this when, my take is that, basically we're at much lower prices. So my take on it is that metals want to go up, but, we'll see where this goes. But it's sweet that it's at a lower price right now.
And I want to use past performance obviously is no guarantee of future returns. However, I want to use as an example, we just had a market-safe mature, a diversified metals market-safe mature that we issued back in May of 2010.
Yes.
And so it was a 5-year CD that was based on this one was based on gold, silver, and platinum. So it was 3 different metals.
Yeah.
But that CD ended up returning for the clients, and I'm pulling up the data on it right now, up over 21%. So that one had a upside payment of over 21% during that 5-year period. And why I wanted to bring it up is those investors that invested back in May of 2010, when
yes.
it matured, those metals were actually at a price lower than the original investment point. So if they had invested directly into the metals, they would have had losses. But because of the averaging that we used on the market safe, they actually ended up with a 21% return. And kind of the best of both worlds, if you would, they booked the return, and then they were able to buy back into the metals at lower prices than they originally invested.
It's amazing, because I think the last time you were on, that's when that thing was mature, and the month before that. And it's so cool, folks. And if you're watching, Tiger TV right now, I have, the gold chart up, and this is dramatic because it just as Chris said, in May of 2010 here, you're talking about gold was $12.49. It goes all the way up to a price point of $19.20. Okay, comes all the way back down, but yet the investor actually made money, and it has to do with that repricing every year, which is really cool because that's almost like, what do you lock it in every year? Is that how that works?
Right. You're locking in that performance on a yearly basis, and then taking the average of those. And I tell you, Tom, as you know, if clients, if a client thinks that, if an investor thinks that metals are just going to go through the roof and are going to go to skyrocket, and don't think that they're going to fall, then perhaps an investment directly into that metal is fine. We've got a couple different ways for investors to invest into the precious metals accounts directly, and maybe that's a better investment for those for those folks. But for those individuals who feel like they don't want that volatility and
Right.
they don't feel like they can time the markets, something like our MarketSafe is really ideally suited to them.
Absolutely. And folks, just know every day right here at TFNN, you can see that banner on the right-hand side. Their phone number is 855-750-4051, and we'll make sure exactly when that baby comes out. Chris, thank you so much. You have a great night, safe night, and look forward to speaking to you again.
Thanks, Tom.
Okay, have a great one. Have a safe one. It's everbank.com, folks, /TFNN. So you have two different choices there. You can you have the second chance to brighten your future with the 5-year MarketSafe Futures Economy CD. You want to wait a bit, meaning I believe it's going to be coming out in the next few days, next week. That's going to be the Metals Safe MarketSafe CD. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished up 236. NASDAQ up 62. S&P's up 25. We're going to be right back, folks.